one sector which has been outperforming today is FMCG. So whether it's HUL, it's Tata Consumers, ITC, Imami, all of them are holding up in the green. Let me toss it to Gurmeet to get a sense from him as to what's causing this excitement within FMCG. Gurmeet, hi, good to be speaking with you. Yes, the commentary from most of the managements have been pointing to a rural recovery, but would you buy the argument and buy afresh in these FMCG names?
So it's a combination of commentary being good. It's a combination of I think elections also play a role because especially in the rural economy, the spending picks up. It's a bit of a form of mini stimulus. In fact, there's a very interesting report which talks of that there's actually some bit of labor shortage in industrial states like Maharashtra, Gujarat, Tamil Nadu, as people go back to rural areas and during election time and there is election related spending which actually leads to some bit of reflection in the rural sales as well, reflecting in FMCG numbers as well. Also, there's a bit of a defensive move. Whenever you have an event risk approaching you, FMCG and pharma are ideal defensive places to, take shelter when, especially when you have made a very good return last 1 year. In fact, if you had a multi-cap portfolio with, let's say, 50 large cap, 50 mid and small cap, you would be around 40-45% kind of a return last 1 year. So I think it's a combination of all those, but you got to be a little more selective, as I said, because the valuations are rich. None of the FMCG names are less than 50, 60 times. So if they fail to deliver on double-digit volume growth and margin expansion, margins also you have to be a little careful because a lot of the profit growth has come from realizations and not as much as from volume. So got to be a little selective. We are more keen on adding the likes of ITC, Tata Consumer, in the portfolio in that space.
Okay, so clearly those are the recommendations within within the FMCG vertical that you like at this point of time. In terms of the other big movers, infrastructure and the stocks like PNC Infrastructure, HG Infrastructure, which have managed to back fresh orders, these are the ones which are up anywhere between 10 to 15%, and IRB Infrastructure too is up around 6%, and KNR Constructions up 5%. These names, Gurmeet, haven't done too much because these smaller infra companies, people had become a bit averse to that. Has the view changed? And if yes, which are the names within those smaller and mid-cap infrastructure stocks that you would like to bet on?
One issue with most EPC construction names is the working capital cycle and margins because the projects are long gestation. You don't know what commodity prices would behave, and people have some memories of 2003 to 8 when there was euphoria and followed by a 10-year. In fact, even if you see L&T, there was some pressure on margins, and it was obviously a combination of Hyderabad Metro ridership issue also, but their working capital and margins were slightly less than what the company guided for. There's no problem as far as what the order book and prospect books goes. The tender book, which they call, which look very very strong despite elections because there's some slowdown there. So I think if you do a bit of a combination of, let's say, EPC names like L&T, if you look at some of the energy names like Power Grid, with the kind of we almost have 3 lakh crores of transmission line which India needs for both the interstate grid connectivity as well as the solar panel project to Power Grid has more than 60% market share, trades at about 16 17 times. The issue with a lot of these EPC and construction names is they're trading at 20-25 times EV EBITDA, very high P multiples. Even somebody like an ABB Siemens, they trade at what, 60-70 times. Very difficult to make money if you enter at these valuations. But if you get some corrections and if you're more in for the long term, maybe the answer could be yes.
In the meantime, Sun Pharma reacting perhaps to its numbers, not quite. It's still pretty flat in trade as we speak right now, although it went in weak into its numbers. The PAT's largely in line at 2654 versus the ET Now poll, which was penciling in about 2600 odd crore rupees for the PAT. So that is what they've delivered so far, awaiting the other numbers. What, of course, is going to be critical is what the US sales are, because we're expecting them to grow about almost 16% to about $500 million odd dollars. The EBITDA has come in at 2985. That, I think, is lower than what we were penciling in because we were pricing in about 3,000 odd crore rupees over there. I'm waiting for the top line and, of course, the regional breakup if there is any.
Yeah, so the US sales have come in a little lower than expectation. $500 million, as Aisha pointed out, was the expectation. The actual number is $476 million. So it's a growth of around 11% and not really 16% that we are talking about. But the stock is actually doing better. Perhaps it's because of the fact that the gross sales have shown a growth of almost 10%. India formulation has been quite strong with a growth of around 10%. And the margins for Q4 have come in, at least the reported margins, what the company is saying, is 25.3% versus 25.6% that they had seen last year. So there's a bit of a hope there in terms of the overall EBITDA margin picture. The overall emerging market formulation sales have come in at $245 million. So the range of growth across these businesses is between 10 to 11. Whether it's global specialty sales as well, that's come in at $271 million, a growth of around 11%. Dilip Shanghvi says that two of their businesses surpass the US $1 billion mark in annual sales, which is global specialty as well as emerging markets. And they also say the achievement of the critical mass in these key markets is a testimony of what lies ahead for them, and they continue to build a specialty portfolio and invest further to gain scale across businesses. I think other than that, it's more of, in terms of what they have done in the full year, and the R&D spends have managed to come off a bit, if I have it right. The R&D, no, actually they've gone up. So the R&D investment is 900 crores versus 666 crores. So the R&D investment has also gone up. I think a lot of moving parts. We'll perhaps get Shrishti or an analyst to join us to talk to us about how we should really read these numbers, because on the revenue side, there's a bit of a miss. The US revenue also is slightly lower than expectation, and not seeing any big major beat on the EBITDA as well, but the street is taking it well. In the meantime, Gurmeet, you study Sun Pharma quite closely. What would you make of the numbers?
Optically, whatever little I see on the screen looks in line. I think revenue probably Street was probably expecting maybe 500, 600 crores more on the top line. I think what I would be keen on, basically looking at three things. One is how is the specialty segment doing? That's one which is driving margin growth and profit growth for Sun Pharma, especially led by the dermatology drugs like Ilumya and Odopso, which are doing well. Some update on Mohali plant, because that's got some resolution and probably will start contributing to US sales. And on Revlimid, I think it's just that probably some good news on Revlimid is probably in the price, because if you see Teva, which has also the generic license for the cancer drug, that trades at 6-7 times, versus if you look at Sun Pharma and some of the other names which trade probably much higher. So I want to see what the specialty segment looks like, because that's what, in my view, it's showing about 11% up. I think that's something would probably Street would like to take notice. And there's a bit of a drug shortage in US on generics overall. So near term, may not be that much concern, but prices have run up.
And of course, the update on remediation of both Halol as well as the Mohali facilities, that's something also that the street is going to be looking out for. But the stock is a little bit all over the place. It fell down about another 1%, and then from there, a little bit of recovery coming in again.
Yeah, I think the research team is pointing out that there's an exceptional loss of 101 crores, which is actually impacting the profitability. I think that might kind of explain a bit as to why we are seeing the volatility in the stock, because people are trying to kind of decode how you should read the numbers, because they're in line when it comes to, let's say, some of the parts of the business, but the optical number on profitability look lower. But I think the fact that there's an exceptional loss of almost 101 crore will kind of negate that factor a bit, because the stock has now moved into the green, again in the red. But Kunal, what's your take on the charts? Is Sun Pharma stock you'd like to bet on? Because very volatile when it comes to the price right now.
You see, volatile, but within a very tight range for the stock. But when you look at the last 2 months of chart, it's little done nothing. I think the high the stock had made in the last 1.5 2 months is closer to 1555, 1560 levels, and the lows for the stock is around 1480 mark, which means it's just confined into a range of 4% broadly for itself. So I think that's a very tight kind of a range. Ideally, post results, we expect that the stock breaks past about this very tighter range consolidation, and whichever way the stock breaks past, after 2 consecutive days, that's where I think one should probably try and take a trade. So I think breaking past about 1560 mark could be a trigger point for Sun Pharma, but we'll wait out for that.
And I think what's most impressive now that you're seeing the stock stabilize finally is the R&D update. In fact, let me take it across to Shrishti and get in more details beyond the operational numbers, Shrishti, because it seems that they're going to be focusing both on specialty as well as the generics business when it comes to the R&D spends. Yes, Aisha, that was the key to watch when it comes to the Sun Pharma earnings, because the US sales as well as how did the company did perform in the global specialty sales, those were the numbers that we were tracking. But on the operational front, yes, there has been a disappointment onto the EBITDA margin as well as revenue figure, though the profit has come in line. There has been an exceptional loss of 101 crores is what the company has reported, over 100 crores for this time around, and that's related to some of the impairment charges. But factoring to that, the profit figure has come in over 2700 crores, and that's a little above than what we were expecting at ET now. But talking about the internals, then the US sales has disappointed a bit, because we were expecting the number close to $500 million, but 460, close to that particular number, $476 million is what the company has reported. And even the global specialty sales did account for 19.1%, while the India sales has come in line to what we were expecting. A 10% growth is what we were expecting for the Sun Pharma India formulation sales, and that is what the company has come out with. What is interesting to see that this time around, the company's management commentary does say that during FY24, the two of their businesses has surpassed the $1 billion in annual sales, namely the global specialty and emerging markets, and the achievement of the critical mass in the key segment is a testimony of the several years of hard work. But other than that, there's been no specific commentary related to the outlook of the global specialty sales, which we generally get to see in the management commentary of Sun Pharma. So as of now, nothing much to read, but the numbers are not that much disappointing, because factoring in with the exceptional loss, the profit has come in a little higher. So I would say it's a mixed set of numbers, but we will wait out for more details from the management commentary.
We'll wait out for that management commentary, but thanks so much, Shrishti, for helping us understand as to how we should read the numbers, because clearly a lot of moving parts there, and the stock too is trying to decode that, a bit of a flip-flop. But what else is happening in the market? Because while we are waiting for numbers from Nykaa as well, ITC will come out with earnings tomorrow. In the meantime, there are some other stocks as well which are buzzing around. You have Gravita India, JBM Auto. Some of these names continue to do well. In fact, since we are talking about auto as well, what's the view there, Gurmeet? Because two-wheelers were coming back, and this goes back to the point that you were making on rural recovery and the monsoons as well. In that context, should one buy some of these auto two-wheelers as well?
You see the total volumes, Anisha, we probably this year will also be lesser than pre-COVID. I think 2019 we did like 2.4 crore units. I think this year probably ending year would be 2.2, 2.25. Not too sure on the exact number. So the actual volume growth hasn't been very static. And if you compare this with China, today probably they sell the same number of cars and two-wheelers. So I think as per capita picks up, it's the car which tends to do well. But there is some valuation comfort in the likes of Hero. There could be some movement because there's a lot of cash on Bajaj Auto. There are buybacks related news, and then the near term there could be some support because valuations are still not very stretched as far as Hero and Bajaj go. We are more keen on the ancillary part of it. We have somebody like a Sandhar Technology where the two-wheeler, four-wheeler mix is about 45-55. They are into locks. They make frames for motorcycles. They also make cabins for trucks, etc. And we also look at something like Uno Minda, which also is doing pretty well. Again, the mix is 60-40 in favor of cars. But we are more focused on the SUV side and the premiumization of the car and the movement towards hybrid and EV. And I think that's where you'll probably see slightly more higher gains. And there we're very, very constructive on likes of Tamo and M&M. M&M also now is almost inching back to 20% market share in the SUV space. More models, more launches coming up. And Tata Motors has seen some correction after the good numbers, but slightly subdued commentary on GEL. So that's something we like more within the auto space.
Right, okay, that's the take coming in on where is it that you see opportunity within the auto pack. But Gurmeet, before we wind down on the show, wanted to understand what your pre-election strategy is also. Do nothing? Are you confident of the government winning the numbers that the market wants?
You have to work with probabilities in equity markets. I think the probability is high, but as they say in cricket and elections, till the last vote or the last ball is bowled, you should not try and take positions. I think something which is not in your control, you should not really try and worry too much about it. I agree it's a large event, and I think if you see the FI position, they are also very light. They've sold almost more than $4 billion this month itself. Their ownership is down to 16% from 22, 23% few years back. On net contracts, they are like almost what I think my colleagues on the panel can tell you better, more than 2 lakh contracts short. So the positioning is light, and I think you can't take an extreme call or either going all in or allowed. So our strategy has been buying on dips. Our strategy has been looking at things where there is valuation comfort, where there is little bit, be a little more contra-cyclical in names which have seen some corrections. And more importantly, temper down return expectations. Our earnings growth with rates being high would be more like 13-14%. Market already trades at 20 times. So you'll not have last 2 year kind of returns. So if you temper it down, the risk side of it, and then obviously I think you will take better decisions. So have more reasonable expectations. And as I said earlier, bonds also look very juicy. The 10 year is already down to 7.07 from 720. You could possibly see 6 and 6.5 on the 10 year next year, which means on duration also you can make double digit returns. So be more balanced and be more sober in terms of your expectations.
Like the Delhi weather, right, Gurmeet? 47 degrees already. How is it that you're coping up?
Oh, it's horrible. It's horrible in Delhi. And horrible is a milder word. So all outdoor is off. And we're looking at some of the AC names. Huge shortage for air conditioners. Huge, and maybe some of the beverage names. Aisha, that's. I mean, consuming it and buying it both problem.
Imagine, but I hope that doesn't stop Delhiites to go out and cast their vote, though. But Paytm, look at that, a 7% recovery coming in from the session lows. Poor earnings, but much of the damage, or rather, so much of the damage was already behind on Paytm. 368 is where that stock is right now. So that's a sizable recovery from the session lows that you've seen. It started off with a gap up, and from there has made a decent move. Anisha, you wanted to address something on Paytm?
Yeah, so brokerages like Bernstein and Morgan Stanley have said that, perhaps the end of that worst cycle is in front of us, and there is recovery which is expected from Q1 onwards. In fact, Bernstein highlights that Paytm's gross merchandise value in April reached approximately 81% of the January level already, signaling a positive momentum and improvement from recent lows. Morgan Stanley also noted a moderation in the GMV growth quarter on quarter, but the year-on-year increase is something which was quite okay. The analysts are talking about how perhaps the recovery is something that one should watch out for, which is impending from Q1 FY25. So I'm just reading through the notes of Bernstein as well as Morgan Stanley, and both are hopeful of that recovery going forward. So that stock off almost 7% from the lows right now. But let's take it across to Vinny and get a sense as to what the expectations are from Nykaa. Vinny, tell us more.
Absolutely. So we're expecting the numbers anytime now, and overall just the expectations are coming in is that we're expecting a revenue growth of 26%. This is what they had highlighted in their Q4 update, that they would see growth in high 20s. So that's what we're expecting. GMV growth expected in early 30s for overall. So a year-on-year basis when you look at it on a consolidated basis. Fashion business, yes, that could see an improvement coming in. Let's not forget its fashion business is a lower base, so we will see an improvement there, but sequentially maybe a bit of a slowdown in the fashion business because seasonality comes into play in the Q3. BPC business, that's expected, that's the beauty personal care side of Nykaa, that's expected to remain resilient, and that's what we'll watch out for in terms of the commentary that they're saying in terms of demand trends over there. What are they expecting in terms of industry outlook for the fashion in FY25, as well as expectations in terms of break even for the fashion segment, and anything on the expansion fund in the international market are key factors that we should watch out for from Nykaa.
That's about Nykaa, but brief us about ITC as well. Numbers, yes, post-market tomorrow, but headline number, what we should watch out for?
So we should be watching out for the cigarette volume growth. That's expected to be flattish at around 1% is what you could expect. And overall, in terms of the revenue growth, that would be at around 3.9%. Yes, do not forget there may be some pricing growth that will come in this time, but that is going to be key to watch out for. Other than that, we are watching out for in terms of the profits, expected to see a muted growth of around 1%. Overall, what the street is expecting right now, what we are penciling in is a muted show that could come in, because the paper and agri business that is expected to be continue to be under pressure. That's what is happening in the last couple of quarters, and that could maybe be the case even this time around. FMCG business, on the other hand, we're expecting FMCG business to see a high single-digit growth in terms of overall the growth over there. While in terms of the EBIT margin, let's watch out for the FMCG EBIT margin, where that is headed. Maybe year-on-year basis, we could see the FMCG EBIT see a bit of a decline, but that's something we are watching out for. Other than that, hotels business expected to see a strong growth that's sustained, given that travel tourism is picking up pace, and hotels business for them has been doing quite well in terms of the strong growth that we've seen in the last year. Secret volume mix over there, new growth vectors for FMCG, as well as the outlook for the paper and agri business are the key factors that we're keeping an eye out on.
Okay, that's the big one. That's both ITC as well as Nykaa, which are anticipated to come out with their numbers. But a bit of a pickup actually for the market. Some of the private banking names have definitely lifted off from the session lows. So while SBI may have cooled off from where it started off, ICICI Bank is seeing a bit of a recovery, and the Nifty as well, by the way, is at the high point of the day. I can say the same about Kotak as well. Perhaps a little bit of a movement coming in for HDFC Bank too. Yeah, Kotak is pretty much around the high point of the day, and that's kind of rubbing off on what the index is doing right now. But Gurmeet, your take on HDFC Bank? One continues to wait for that one day when it's finally going to move, but it's, I guess, tested patience for a very, very long time now.
No, I agree. It's a long wait, and I think ICICI and Axis have taken the leadership as far as the private bank numbers goes. And purely look at operating metrics, look at the NII growth, look at the names, look at the CASA mix. It's actually better than what HDFC has been doing. Obviously, we can't compare on a like basis because of the merger. But HDFC and Kotak used to get 4-5 book value for the industry leasing metrics, and I think that's been matched and done slightly better by ICICI and Axis. I think it might stay there for some more time till HDFC really gets the merger thing fully integrated, and the liquidity ratio as well as the cost of funds sees some bit of tapering off. I think PSUs, I think SBI in my view looks pretty good. I think continues to deliver quarter on quarter. I'm very gung on some of the payment business and other stuff SBI is doing. It's still at about 1.2, 1.3 book value. And if you see some PSUs, Aisha, I've not seen 1% ROA for a very long time in PSU banks, right? And I think if they can sustain that and not just be dependent on treasury gains and other stuff and recovery, but they can sustain ROAs purely on NI and NIM expansion and growth, I think we are due for this one more round of due in terms of they getting re-rated.
So that's a view on PSUs as well as some of the private banks. But interesting move on the index right now. The Nifty is past that level of 22,600, and the bulk of that recovery has actually happened in the last 5 minutes. And that's all attributed to the kind of recovery we are seeing in the private banking names that we were just alluding to. So the Bank Nifty has also moved considerably off the lowest point of the trading session. And that's taken, of course, the Nifty also with it. In terms of the key gainers, it continues to be Reliance, which is adding almost 40 points. HUL, Infosys, ITC are the other top gainers, while the losses have narrowed substantially on ICICI, SBI, Axis. So they are clearly participating. Gurmeet, we'll let you go on that note.
If you like this video, then like, share and subscribe to ET Now.